Welcome to this week's Crypto Roundup. In today's recap, Tether sets sights on a US-based stablecoin, while Wall Street titans embrace blockchain with tokenized money funds and crypto lending. Solana's new treasury venture aims to raise $1.5 billion, and Polymarket re-enters the US market with stablecoin plans of its own. A major lawsuit targets Solana and Jito execs over meme coin trading. Trump media shifts $2 billion into Bitcoin, BitGo, and Bullish prepare for IPOs, and Jito revamps Solana's block infrastructure. Plus, Telegram brings crypto wallets to 87 million American users. Let's begin. Tether, the issuer of the world's largest stablecoin, is preparing to launch a new U.S. domestic stablecoin designed for institutional use, marking a major step in its return to the American market. The move follows the passage of the Genius Act, which establishes strict requirements for fiat-backed digital assets. Speaking to Bloomberg, Tether CEO Paolo Ardoino said, "We are well in progress of establishing our U.S. domestic strategy," and confirmed that the company plans to announce it in the next couple of months. The forthcoming stablecoin will be distinct from USDT, which serves global markets and currently holds a market cap of over $162 billion. Tether's U.S.-specific token will focus on institutional payments and interbank settlements. Ardoino acknowledged competition from major financial firms entering the stablecoin space, but noted, "We have a much better understanding of this market than anyone else." That brings us to a broader trend among traditional financial powerhouses embracing blockchain infrastructure in a big way. Institutional adoption of blockchain technology accelerated this week as major U.S. financial firms unveiled a series of crypto-focused initiatives. Goldman Sachs and BNY Mellon will launch tokenized money market funds on Goldman's digital asset platform, backed by U.S. Treasuries. These funds will be available via BNY Mellon's Liquidity Direct platform, allowing institutional clients to manage liquidity and rebalance portfolios around the clock using programmable smart contracts. Early participants include BlackRock, Fidelity, and Goldman itself. The tokenized U.S. Treasury market has grown nearly 500% year over year to $6.75 billion. JPMorgan is exploring lending directly against Bitcoin and Ether holdings, marking a shift from its earlier stance. The move would involve using third-party custodians to manage crypto collateral and reflects broader institutional engagement under lighter regulatory conditions. Western Union is developing stablecoin on- and off-ramp services within its digital wallet. The firm is also assessing ways to offer stablecoin products to global users for cross-border payments and value storage. Meanwhile, PNC Bank has partnered with Coinbase to provide crypto access through the exchange's crypto-as-a-service platform. The collaboration will allow PNC's 12 million customers to buy, hold, and sell cryptocurrencies, further bridging traditional banking with digital assets. Speaking of institutional moves, a major Solana Treasury initiative is taking shape, led by a familiar name. Joe McCann, founder of the crypto hedge fund Asymmetric Financial, is set to take the helm of a new Solana-focused treasury company called Accelerate, according to pitch materials obtained by Unchained. The firm aims to raise up to $1.5 billion and go public via a SPAC merger with GorZex Holding. Despite Asymmetric's liquid fund reportedly falling 80% this year, McCann announced its closure on X, writing, "I've notified our LPs that we are shifting away from liquid trading strategies." He offered investors the option to exit or roll over capital into an illiquid strategy. Accelerate's financial model outlines plans to raise $800 million via a PIPE, $358.8 million through the SPAC vehicle, $250 million in convertible debt, and $103.2 million from warrants. If successful, Accelerate would surpass Upexi to become the largest SOL treasury firm, with plans to acquire over 7 million SOL tokens. Another company making headlines this week is Polymarket, which is planning a return to U.S. users after years on the sidelines. Crypto prediction market Polymarket is preparing to re-enter the U.S. after acquiring QCX, a licensed derivatives exchange and clearinghouse. The $112 million deal gives Polymarket access to a commodity futures trading commission license, resolving prior regulatory barriers tied to unregistered trading activity. The platform had previously agreed to block U.S. users in 2022 as part of a CFTC settlement. But recent investigations by the CFTC and the Department of Justice have now concluded. Alongside the acquisition, Polymarket is also considering a move into the stablecoin space. The company may either launch a platform-native stablecoin or pursue a revenue-sharing agreement with Circle, the issuer of USDC. A person familiar with the plans told CoinDesk, Polymarket is locking a lot of stablecoin value in their betting pools, and so they want some kind of mechanism to get the yield. But while some companies are returning to U.S. markets, others are heading into legal trouble. A newly amended lawsuit is putting serious pressure on some of Solana's biggest names. A class action lawsuit filed in the Southern District of New York has accused Pump.fun and its infrastructure partners of running a $5.5 billion unlicensed gambling operation through meme coin trading. The amended RICO complaint names top executives from Solana Labs, the Solana Foundation, Jito Labs, and the Jito Foundation as co-conspirators. Defendants include Solana co-founders Anatoly Yakovenko and Raj Gokal, Foundation leaders Dan Albert and Lily Liu, and Jito Labs CEO Lucas Bruder and COO Brian Smith. The plaintiffs allege the firms engineered and maintained a system resembling a digital casino, using bonding curve pricing and anonymous wallets to simulate gambling. They are not bystanders to fraud. They are its architects, beneficiaries, and co-conspirators, the complaint states. Additional claims include wire fraud, unlicensed money transmission, and securities violations. Meanwhile, a high-profile media company is going all in on Bitcoin. Trump Media and Technology Group, the parent company of Truth Social, has acquired approximately $2 billion in Bitcoin and related securities, marking a major step in its transition to a crypto treasury model. The purchase represents about two-thirds of the company's $3 billion in liquid assets. An additional $300 million has been allocated toward Bitcoin options, which the firm may convert into Bitcoin depending on market conditions. CEO Devin Nunes said the move aims to help ensure our company's financial freedom and support future token initiatives tied to Truth Social. Elsewhere, the crypto IPO pipeline is starting to flow again. Two major players in the crypto sector have filed for public listings, as the industry benefits from renewed market momentum. Crypto custody firm BitGo has confidentially submitted a draft registration statement to the U.S. Securities and Exchange Commission for an initial public offering. The Palo Alto-based company, which recently surpassed $100 billion in assets under custody, has not yet disclosed its target valuation or offering size. Meanwhile, Bullish, the digital asset exchange backed by Peter Thiel, filed publicly for a $100 million IPO with plans to list on the New York Stock Exchange under the ticker BLSH. Despite reporting a $348.6 million net loss in Q1 2025, the firm highlighted over $1.25 trillion in total trading volume since launch. The deal will be underwritten by a consortium of major banks, including JPMorgan and Citigroup. Next, we turn to a major infrastructure change coming to the Solana network. Jito Labs, which powers most of Solana's network activity, has introduced a major upgrade called the Block Assembly Marketplace, or BAM. The new system changes how transactions are organized before being added to the blockchain, with the goal of making Solana more fair, secure, and efficient for users. BAM is basically decentralizing ourselves, said Jito CEO Lucas Bruder, describing the shift as a way to give more control back to the broader network. Instead of relying on a single system to sort transactions, BAM uses a network of trusted computers to do the job privately and securely. This helps prevent unfair trading practices and creates a visible audit trail. BAM will also let apps earn revenue and share it with users, developers, or token holders. Jito plans to expand the system throughout 2025 and make its code open to the public later this year. In related news, Solana developers are testing a 66% increase to the network's processing limit per block, aiming to support heavier traffic from complex apps like DeFi order books and NFT mints without slowing down transactions. Now to Washington, where a new crypto bill is taking shape in the Senate. Senate Republicans have introduced a discussion draft aimed at reshaping crypto market regulation by building on the House-passed Clarity Act. Led by Senate Banking Committee Chair Tim Scott, the proposal defines a new category of ancillary assets, crypto tokens that are not classified as securities. Ancillary assets are described as intangible, tradable assets sold without offering equity or ownership rights. While not regulated as securities, issuers would still need to disclose information such as project details, supply metrics, insider activity, and leadership background, unless they raise less than $5 million in their first year or remain below that in daily trading volume. The bill instructs the SEC to adjust its rules for digital asset activity and would also permit banks to custody crypto, make crypto-backed loans, and run blockchain infrastructure. It does not address CFTC oversight, which is expected in a separate bill from the Senate Agriculture Committee. Finally, we wrap up with a major rollout from one of the world's most used messaging apps. Telegram has rolled out its crypto wallet, Ton Wallet, to its 87 million users in the United States. Integrated directly into the messaging app, the wallet allows users to send, receive, and manage cryptocurrencies without needing additional downloads or logins. Developed by the Open Platform and powered by the Open Network blockchain, Ton Wallet is self-custodial, meaning users control their own private keys. Features include peer-to-peer token transfers, crypto swaps, staking, and zero-fee purchases via MoonPay, using Apple Pay, Google Pay, or debit cards. A split-key system links wallet access to a Telegram account and email, streamlining security and recovery. Ton Wallet had previously launched internationally in 2023, with over 100 million activations by 2024. The U.S. launch had been delayed due to regulatory uncertainty, but is now backed by the Ton Foundation. Thanks so much for joining us today. To learn more about Pump.fun, the Pump token, and Jan, Jason, and Simon, check out the show notes for this episode. Unchained is produced by me, Laura Shin, with help from Matt Pilchard, Juan Uranovich, Pamela Jumdar, and Marco Correa. Thanks for listening.